want to welcome everyone to the Hemophilia Council of California's March webinar. This is part of our advocacy and public policy webinar series. And tonight we're going to be talking about how insurance works, taking a peek behind the curtain to see what the wizard is up to and see if we can understand our health insurance a little bit better. So I am thrilled to announce and introduce our speaker for tonight. Elizabeth Stoltz has been involved with the hemophilia and rare disease community throughout her career. And we are especially pleased that even now in her retirement, she's continuing that service to our community, working with the Hemophilia Council as a volunteer and bringing just so much insight and expertise to the various projects and initiatives that we are working on together. So thank you, Elizabeth, for being here tonight. And I'm gonna hand it over to you.
All right, thank you so much. So you guys are running the slides. Okay, perfect. Thank you all for joining us tonight. This will be fairly quick. Hopefully we'll get a lot of interaction at the end. So the first question is, why are we talking about all this? And why does it often feel like the insurance company is like the wizard behind the curtain and we don't know what goes on back there? So we kind of don't know how to interact with them. So we're going to go over just some of the basics of what insurance companies do and how they stay in business. And that way we can learn a little bit how to work with all the managed care and health insurance companies to our advantage. So managed care is everywhere now. It used to, oh gosh, okay, I shouldn't say that, 20 years ago, 20, 30 years ago, managed care wasn't that big, but now almost everyone's in a managed care plan. And I'm going to define that for you on the next slide. All right, so managed care plans are really just a type of health insurance. What it means is these managed care plans, which could be Kaiser, Molina, Aetna, Cigna, a whole bunch of them, they have negotiated contracts with healthcare providers like HTCs, HTC physicians, and medical facilities and specialty pharmacies to provide care for the members. And the members are the people who pay in to be into the insurance, to be a member of the insurance company and be covered. So they negotiate to, I'm so sorry, they negotiate to get a lower cost from the providers. So what that means is normally if I would go to my regular primary care doctor and she would charge, if I had no insurance, she would charge me $100. When she's negotiated with my managed care company, with my insurance company, she may say, all right, Aetna, if you send me more patients and I'm in your network, you can pay me less. So you can pay me only $85 instead of the $100. So what that means is you've got these contracted providers and hospitals and pharmacies that are in the plan's network that allow the health insurance company or the managed care company to save some money.
Hey, Elizabeth,
Yeah.
Can you clarify when we say providers, what are, I think you've alluded to this, but what are all the types of providers there might be?
Thank you. Love the question. Providers can be a physician. So it could be your HTC physician. It could be your physical therapist. It could be a psychiatrist, or maybe it's your ear, nose, and throat doctor or your surgeon. So providers is really broad. All right, so now we start to pull back the curtain a little bit and we say, okay, how does this really work then? And it's really a big math thing. The insurance company gets money or revenue or income through the monthly premiums that the members pay, and also there's deductibles that we pay and our copays. So again, they get money in from their members, and then they pay that money out to the providers based on the care that the providers have given. So an example is if you go to your HTC, the insurance company is going to pay directly to your HTC physician, your HTC, and that way you don't have to pay the doctor. So it's money in and money out. And we have a little bit of a good visual on the next slide to demonstrate that. So the people in the red and blue, those are members. They pay in premiums, which is the monthly charge to be on that health insurance plan. They pay that to the health insurer. And then the health insurer, again, pays out for claims, and claims is just basically when you get a service. So the health insurer pays out those claims. So they've got money coming in and they've got money going out. So it's kind of like a bank account. You have to have a little more coming in than you have going out, or else you're not going to be able to stay in business. And just to put a little context around this, folks with bleeding disorders often have a lot of money paid out on their behalf for their care because they're just expensive disease states to treat and keep you healthy. So, for example, you might pay in $1,000 per year to your health insurer, but your health insurer might pay out a lot more than that $1,000 for your care. We've got another little illustration on the next page or the next slide.
While I'm flipping over, so with our premiums, wouldn't it be true that sometimes our employers also contribute to those premiums too? So sometimes it comes out of our pocket and sometimes it comes out of the employer's pocket, and sometimes it's a combination of the two, right? Like,
yep.
Like at least for my health insurance, we get it through my husband's work, and his work pays quite a bit towards it. But then part of it, there's a little bit taken out of his paycheck every month that helps supplement what his work is paying for our insurance.
Yep, absolutely. Yeah, because those premiums are not inexpensive. If you are on Covered California, you have to pay that whole premium. If you are like Lynn, whose husband has the insurance, then his company, his employer, will help pay part of that.